back, accounting students. We are currently in Chapter 13, Accounting for Payroll and Payroll Taxes, and we are all the way up to Lesson 4, which is actually paying the withholding and the payroll taxes. So the objective of this lesson is to pay and then record the withholding and the payroll taxes that have been paid for a business. Lesson 4 actually starts on page 392, and this is one of the chapters where you might want to go ahead and look at the really nice chart that is established for you on page 392. That's actually going to help you to determine how frequently a business would need to go ahead and actually pay their taxes. So just a couple of vocabulary items that are pretty important. Employers have to pay all the federal, state, local payroll taxes that are withheld from employee earnings, as well as the employer payroll taxes that employers are required to pay above and beyond what employees actually earn. So the payment of these payroll taxes to the government is referred to as a deposit, and after a business has established itself, the government uses what's called a look-back period of the previous 12 months that end on June 30th to determine how frequently a business is required to actually pay their payroll taxes. Now, all new businesses or new employers are established as monthly scheduled depositors, so they have to pay every month. But after a look-back period is established, and again, that 12-month period that's going to end on June 30th of a previous 12 months, that's when employers might have to adjust the schedule of when they deposit their taxes. So here is this chart that you would follow to determine following that look-back period. So are the total taxes for the prior quarter less than $2,500, and all of the current quarter tax liabilities within a deposit period are less than under $100,000? So if the answer is yes, then you deposit your taxes by the end of the month after the end of the quarter, or you just mail your taxes with the 941. If the answer is no, or if you're not sure what the answer is, then you go on to the second question. Have you accumulated a tax liability of $100,000 or more within a deposit period? If the answer to that is yes, you're supposed to deposit those taxes by the next business day. If the answer is no, then it says you fall under the $100,000 rule at any time during this year or the last year. If the answer is yes, you are semi-weekly, which means if your payday is Wednesday, Thursday, or Friday, then the payroll taxes need to be deposited by the following Wednesday. If your payroll is Saturday, Sunday, Monday, or Tuesday, then you need to go ahead and pay by the following Friday. If the answer is no, and the total taxes for the look-back period are more than $50,000, you are again a semi-weekly depositor. If the answer is no, you're a monthly depositor, and you would deposit taxes for the month by the 15th of the following month. And just as a reminder, all new employers are monthly scheduled depositors. So in essence, the government's looking at how much is that tax liability, and the higher it is, the more frequently they want you to deposit the money. So in terms of making the federal deposit, again, new employers are monthly depositors. You have to have that look-back period to be established before you can change off that monthly deposit schedule. Federal tax deposits are paid using electronic funds transfer. The government wants their money, and they want their money to come to them without any risk of the money not being available. Deposits are also made using electronic federal tax payment system. Most employers take advantage of the electronic funds transfer. But just to remember, you're dealing with the federal government, and so tax rules change periodically. And as an employer or somebody managing the accounting of payroll taxes, you just would want to pay attention because tax rules change. All right, so how do we go ahead and journalize the payment of liability for employee income tax, Social Security tax, and Medicare tax? All right, on January 15th, paid cash for liability for employee income tax, $998. Social Security tax,
$2,023.06. Medicare tax, $473.14, for a total of $3494.20, using check number 748. All right, so here are the T accounts. You can see the employee income tax payable that we are actually looking at. What we have here are a couple of credits for the employee tax payable, and then we're going to note a debit on the January 15th of $998 to go ahead and clear out that liability. We're going to do the same thing for Social Security tax, Medicare tax, and then we're going to go ahead and credit cash. So as you're looking at these T accounts, you can see we had several payrolls that we are depositing for in January 15th. So our December payrolls, the 2 December payrolls, we're doing the deposit for on January 15th. When you look at the cash payments journal, you can see in order to zero out that liability, we're noting these as debits in our general section. Okay, our accounts that are debited, the check number, the debit amount, and then the actual check amount is a credit to cash. All right, so paying the liability for federal unemployment tax. Federal unemployment tax is paid at the end of the month following each quarter if the liability amount is more than $500. However, all unemployment tax liabilities outstanding at the end of a calendar year have to be paid. So at the end of the year, you have to pay them. Federal unemployment tax is paid to the federal government using that electronic transfer again. The government wants the money. And the deposit is similar to the deposit that's required when you do income tax or Social Security or Medicare, and that you go ahead and post it the same way. So here's how you journalize it. Pay cash for the federal unemployment tax liability for the quarter ending December 31st, which means now we're at the end of the year, so anything that would be due is we're responsible for paying. And you can see that we had a November 30th balance plus any tax that was payable for December 15th and December 31st. So our January 31st that we're responsible for paying is that $297.02. Here we go with journalizing. So unemployment tax payable for federal, and the debit, and then the credit amount. We're going to go ahead and make sure that we also journalize the payment of the state unemployment tax. So you can see that there was a balance that we had with the responsibility for paying for November, and then we had our 2 payrolls in December. So as of January 31st, the state unemployment tax that we were responsible for paying was $147.42. Remember, we collected this out of employee paychecks. We posted it on our books as a liability that we were responsible for paying, and now we're going to go ahead and pay it. So unemployment tax payable to the state, and you can see then the debit and the credit amount because that's where we're issuing the check. All right. So for a monthly scheduled depositor, when our federal payroll tax is actually paid to the federal government, remember they're paid the 15th of the following month. So all of your payroll taxes that were collected for the month of December, they go to the government by the 15th of the month in January. What method are businesses encouraged to deposit all those federal payroll taxes? And again, they want all this stuff electronically. So the electronic federal tax payment system so that they get their money and they're happy. All right, so from here, make sure you've done the forms, the work together and on your own. And once you complete those, you can go ahead and do all of the application and the mastery and the challenge assignments for this chapter. Good luck, everyone.